Hey, Edge Traders, this is Tyler Turner again here at the end of week 10, and I'm excited to go through the results from this last week and now the end of May, which, as a lot of you know, is the first losing month with Titan G7, which was to be expected. And so I'm excited to go through the account with my live account and then go through the different demo accounts. But first, we're going to review Joe's post from yesterday, which was really, really good. In fact, I'll leave a link above in the description above this video to Joe's post, which is probably just below this post, honestly. But and then I'm going to cover the results from those accounts, and then I'm actually going to talk about Titan G8 a little bit and Titan X, or whatever we're going to end up calling that product that I'm also really excited about. So let's start with Joe's post. Actually, I'm just going to quickly review his post here. So kind of the main thing he talked about in his post was facts versus fear. And I really, really liked this post because it just kind of puts things in perspective. Obviously, with the software, we're really basing a lot on these backtest results. So basically what we're doing is we're using a system that in the past, historically, has been proven to be an amazing system. And Joe actually talks about in the post, so the question is, how reliable are the backtest results? So you can actually go in here and read this exactly why they are very reliable backtest results that we used. So you can go in and read that after. But basically, in a nutshell, G7 uses statistics and probabilities, right? So it's using probabilities in that it's using a certain winning percentage. It's using statistics of doing well in certain areas and whatnot to have this edge in the market to be able to, over time, using that edge, come out on top and end up winning more than it loses, and obviously earning more than having more profits than losses, right? So that's G7 in a nutshell, right? So I really suggest that you go through this post. Joe really puts things in perspectives, facts about the backtest. For example, there were 26 out of 197 months in the backtest that were losing months, which means 13% of the months were actually losing months. And then he actually talks about going forward, of those 26 losing months, there were 5 instances where it had back-to-back losing months. In other words, there's a 19% chance that June could also be a losing month. So we do need to expect that, if we're basing things on this back test. But on the positive side, the software also, 81% of the time, it actually had a profitable month after the losing month. And of all those profitable months, it yielded at least a 9% gain or more, and actually averaged a 21% gain on the 0.1 per $1,000 setting. So I have high hopes for June, but I also am not going to be concerned. In fact, Joe talks about this. I'm personally not going to be concerned until if we had 3 losing months in a row, because we haven't seen that in the back test, right? If there's ever something that I see that's out of the norm that I didn't see in the back test, that's when I'm really going to be concern. And I would say, that's when we would really need to seriously look at, what's going on here. But as of now, everything is completely normal. In fact, I'm excited to show you my results up until now to give you a kind of long-term, expectation, because a lot of you may have started at the very end of April or beginning of May, which was, about when that losing streak started. So I just want to help you guys by showing, a more long-term account that I've had, and actually some accounts that started, all these demo accounts I'm going to show you, they all started like a week or two. I think it's just a week before kind of that losing streak started. So you'll see how even that made quite a big difference just starting a week or two before. So, that just goes to show, obviously, with Titan G7, it's a long-term product. You got to let things play out. And another exciting thing that Joe talks about in this post that I'll mention is, he ran a back test from when he started at 0.01 per 1,000, which was on April 12th on his account. Before that, he was using different settings, but on April 12th, started at 0.01 per 1,000, and also ran the back test from the same exact date. And his live account actually had a 5.36% return since then and a 13.8% max drawdown, whereas the back test had only a 5.15% gain, so a little less here, and an 18% max drawdown. Meaning that the live results were actually better than the backtest results, which I think can really be reassuring for a lot of you. It definitely is for me. So definitely take a look at this post that Joe had. He really puts things in perspective, talks about the facts of the backtest, the fact that the backtest is reliable and that it's something that we can look at and kind of base things on as we go forward to see if there is something that's out of the norm. And then kind of the last thing I wanted to mention here was how Joe talks about the difference between like algo or bot trading versus manual trading. Because guys, trust me as well, there have been times where G7's gotten into a trade and I'm like, why is it selling right now? It should be buying. Like, you know, there's obviously support here. There's obviously, you know, this trend or whatever, right? But you know, it's all based on statistics, like I said, right? Like I said right here, statistics and probability. So yes, it is going to lose some. It's also going to win some, and as long as it comes out on top, statistically, you know, it's gonna be profitable. And so it's all based on those probabilities, and that's why it's really important that, you know, if you are manually intervening or doing anything with the software, that you back test whatever you're doing, or it's really like gambling, right? So anyway. Joe talks a little bit more about what I'm going to talk about here in a minute. So definitely go and look at this post. It's a really, really good post and really puts things in perspective. And I hope it helps a lot of you to, you know, see that what's happened so far with G7 is completely normal. And we're really excited about G7 moving forward. So moving on to the next part, I'm going to talk about the results for week 10. Also, before moving on, like I said, the link to Joe's post is above. So the results for week 10, I'm going to dive into that now. So here is my live account that I haven't touched since March 23rd when I started it. As a lot of you know, I started with the 2% risk per trade. Then I went to 0.01 per 1,000. And then actually, unfortunately, I switched to 0.01 per 750 during the losing streak. So, you know, if I had stuck to 0.01 per 1,000, I'd actually be a little bit higher right now. But I've been running 0.01 per 750 on my account for a few weeks now. I don't even know how many weeks it's been now, maybe 5 or 6 weeks. So so here are my results from this last week. You can see that, you know, at the beginning of the week, let's see here. So here is the end of last week, 41.61%. You know, we kind of lost a little, but then last day, you know, G7 came back and basically closed about break even for the week, you know, at a 0.2% gain. So not much there. And then obviously the floating losses have the equity down a little bit as well. So this last week was kind of a break even week, but, you know, it's looking very promising because over the last 2 weeks, you know, it's gone up from 29% all the way up to this 41%. So it's gone up over 10% over the last 2 weeks, which is great. So far monthly, the average for me, even with this last losing month of May, has been 16.73% with 18.81% max drawdown, which is really good. And, you know, matches up pretty well with the, you know, the back test results, honestly, as far as that goes. So you can look at that sheet. Should have access to that sheet as well. I guess I can post that as well in my post above. But I also wanted to show you guys down here so you can see March. You know, I made 23.96%. In fact, March would have been a really good month if I had started sooner in March, but this is only from the 23rd to the end of March, which is amazing, right? So 24%, and then 15.95% in April. And then May, my account actually only ended up losing 1.3% on the 0.01 per 750. And that was without touching it, like I said, as well. So first losing month obviously was May. But if you guys look at the backtest results, I mean, that's really quite normal, you know, to have a losing month and to be around that, you know, 1% for me. I mean, some of these are as high as 10%. In fact, that's 0.01 per 1,000. 0.01 per 750 can go as high as, I mean, 21% loss, you know, last May, for example, or 27% here. But yeah, mine only ended up being a 1% loss about for the month of May, which is really not that bad. Now, I know a lot of you have more than that as a loss. In fact, I'm going to show you the results. Well, here, let me just skip to, so this is 0.01 per 750. I'll skip to like 0.01 per 1,000 and show you guys that account first. So this is the demo account that started back on April 19th. And like I said, you guys can see here, I mean, it actually went on a really good streak here on this week, you know, made about 9%. But, you know, if you started like April 29th, that was probably the worst possible time to start, you know, with a live account. And so since then, you know, it went down, got all the way down to negative 2%, came back up over the last week to about 4%. And now it's sat at 1.16%. So, you know, this one as well had a negative 3%, you know, a losing month in May for the 0.01 per 1,000. So it's the same there. 0.01 per 500 also had a losing month, you know, obviously higher of 6.86%. So that one stayed, pretty much break even over the last 5-6 weeks or whatnot. 0.1 per 250, which I don't suggest running 0.1 per 250. It's kind of just for fun, right? Just to watch it. And then 0.1 per 500 is even a little bit aggressive, but I don't think it's not too overly aggressive. But it is a little bit aggressive. But 0.1 per 250, I don't suggest running. I mean, look, the max drawdown's already been at 48% just in 6 weeks. So yeah, we'll see how this account keeps going. But look, it lost 22% in the month of May, without touching this account. And then if we move over to the percent risk, this is 2% risk per trade, which is really interesting. You can see it's had a max drawdown of 39% as opposed to the 0.01 per 1,000 max drawdown of only 13%. So that's a huge difference there. It just goes to show exactly like we were talking about in the backtest results that the fixed lot size per equity in your account should yield a lower drawdown with a higher monthly return than the percent risk. And maybe we're not comparing apples to apples with 2% and 0.01 per 1,000, but I mean, you can see, if we compare it to, I don't know, negative 12% or something, I guess that one's a little bit more similar with the drawdown. But anyway, 0.01 per 1,000 is a great setting. I'm running 0.01 per 750, also a great setting. So anyway, we don't suggest running the percent risk per trade just because it did yield a higher drawdown and lower return in the back test, right? But you can do whatever you want, and it's an option strategy 3 on the software. But this one for the month also had a losing month, 21% losing month for May on the 2% risk per trade on this account. And then the 5% risk per trade. This is the one, guys, that if you remember, the auto trading was off for a minute here because I showed how to, delete that equity line or whatever in that one video. And for some reason it shut off the auto trading and I didn't realize it till after a few days. So this one actually missed some losing trades, I'm pretty sure. And so it should be a lot worse than this. But it shows a 6% loss for May. It should be a lot more than that. But yeah, from here on out, obviously just letting that account run. We'll see how that one does as well. So those are the results from the different tests. So they all show, a loss for May. There shouldn't be really a win for May with any settings, unless you were adding, money to your account and happen to play out. Also, another thing, guys, is, I looked at, for example, this last week, compared my account to Joe's account. My account was break even. Joe's account, for example, or, any of these other accounts too, you can see they had a slight losing week this last week, whereas mine just kind of broke even for the week. And I'm not touching the account, guys. I'm not manually intervening. I don't want to do that because, that'd be gambling. Like I said, I'm trusting the back test. I'm using that as my strategy going forward, obviously. So I'm not touching this. But the reason that mine broke even here is because my account equity, you can see it's kind of right at that point where sometimes it'll take a 0.02, sometimes a 0.03 lot size. So what happened was on the ones that I won, it happened to take a 0.03 lot size because of the equity at the time, and it lost with the 0.02 trades lot sizes. So, the lot sizes weren't as impactful, and the winning the 0.02 lot size didn't impact it. The losses didn't impact it as much, and the wins impacted it more at a 0.03 lot size. So that's why I ended up break even. So it is going to vary a little, guys. It's not going to be like the exact same, because it really does depend on your equity and the lot size it takes and all that stuff. But, if you just kind of let it play out, I mean, the back test was obviously adjusting based on that as well. So anyway, guys, so that is that for the results for week 10. So I'm just going to move on to, hey, before I move on, I just wanted to say as well that, like I said, if you started, end of April, I mean, you can see that's right when my account started not doing as well. And just, that was the month of May, right here. This is the month of May. This is basically the month of, April. I mean, here, like from here to here is March, from here to here is April, from here to here is May. So, I mean, if you really look at it, it's doing great. And it, obviously with only a negative 1% loss, it's completely normal when looking at the back test results. So, like I said, go read Joe's post. It's going to make a lot of sense. Algo trading versus manual trading, all that stuff. So yeah, I hope this, helps you guys see that. And And guys, the reason why, we try to educate over and over and over again on how G7 works is because we really, really do believe that this product is going to change a lot of people's lives, and hopefully everyone's life that's a member here at Blue Edge Financial. And so that's why, when we have a losing month, which we knew was going to come eventually, I mean, 13% of the time, right? We knew it was going to come. We knew that we were going to have to help people through it. And the more people that we could help get through the losing months, the more people that are going to benefit from the winning months, right? So that's why we're, constantly educating. We're constantly trying to, help everyone understand how G7 works. But we do understand that, G7 it's exciting for a long-term product. I mean, is it not? It's very, very exciting having a 16-year back test. That this software would have survived 16 years. It would have thrived, not just survived, but thrived over the 16 years. And so, to me, it's really exciting. And the fact that the back test matches the live results, and so far that we've tested, and then that there's been nothing out of the norm as far as the live results that we've had going forward, and the fact that my account is up 42% in 10 weeks. I mean, that's amazing, So I'm absolutely pumped, and I hope you guys are as well with G7. But as Joe points out, actually in his post as well, he kind of just covered everything in his post. Is that we're constantly innovating, guys. I mean, we're going to be constantly coming out with updates. We're going to come out with it's just always going to get better. Just so you guys know. Now we could just leave G7 as is. G7 is great as is, right? I mean, G7, like I just said, it's performing as it should. It's live results match up with the back test, like all that stuff. So we could just leave G7 as it is and go from there. You guys have a great academy that I worked so hard on to create, that hopefully you guys have gotten a lot of value out of. We have the G7 that's performing the way it should be performing. So we could just leave it as it is, but why not reinvest all the profits into R&D and make this thing freaking bomb, right? So that's what we're doing, guys. We're reinvesting so much of our profits back into Blue Edge Financial, back into the business and into research and development, so that we can make this product G7 even better, which, may seem like, wow, like how can it get much better than this, right? But there's always room for improvement, right? And so anyway, that's why we're releasing G8, which is, obviously our long-term product. G7 currently is the long-term product. G8 is simply an upgrade of G7. So don't think of it as like, oh, like, you guys are coming out with the next best thing. I mean, we've been working on G8 for months now. This is not, I mean, we were working on G8, in April, for example, when it was killing it, when I was up, 50% after like 4 weeks or whatever on my account. We already had G8 in the works, obviously. We're not coming out with G8 because G7 had a bad month, right? I mean, the bad month is normal, so we're not concerned about the bad month. But we're upgrading we're going to upgrade everyone to G8, 100% free. So we're going to keep it at 147. We think that's fair. We think that that gives the company enough profits as well to reinvest back into the products to make them even better, because that's the purpose of Blue Edge Financial, is to help everyone prosper, right? So if we can keep reinvesting back in, make the products even better, that's what everyone's really going to benefit from. We're product focused. We're not affiliate even focused. I mean, it's great that we have an affiliate plan. We think you guys deserve to be rewarded if you refer people, right? I mean, why not pay you guys for that? We can take that away too if we wanted to, right? But we're really product focused because that's that's where the real money is going to be made, is in the market. So that's why we're constantly innovating. That's why we're constantly going to be coming out with G8, probably G9, probably G10, probably G11, right? It's going to be these upgrades just like an iPhone to the next iPhone. So expect more upgrades in the future, guys. We're going to be constantly optimizing and making this thing the best it can be. And I think that's the best way to do it as well, right? Is as we move forward month after month after month with this product, is improving it and optimizing and just making it the best thing possible, so that we all can prosper using this product in the best way possible going forward. So the point of G8, or the release of this upgrade, is actually going to reduce the period of stagnation over the 16 years of the back test. So the current period of stagnation is 144 days. Now, what does period of stagnation mean? Well, basically what it means is, let's say that your equity was at $1,200, right? And then you started to lose money, and then you made some money back and you're still at 1200, and you lose money and you're, make money back, you're at 1200, and you don't reach this new equity high above that $1200. That's a period of stagnation, of winning and losing periods that just doesn't give you a new equity high. So the current longest period like that over the 16 years back test was 144 days, which, that's over 4 months. That's close to 5 months. It's pretty much 5 months. So that could be a long time, guys. Can you imagine? And I totally understand this as well. I mean, I feel you guys on this one. You pay 147 a month for access to this and to our academy and everything, and yet you're basically break even for 5 months. I mean, that would just kind of suck. So that's why we've been working really hard to reduce that period of stagnation over the 16 years, so that it's, instead of 144 days, it's down closer to, now we don't have the official number yet, but closer to possibly 30 or 40 days, which would be amazing. Can you imagine that? The longest period of stagnation over 16 years is only a month. I mean, that's perfect, right? So that's been our goal with this upgrade with G8, is really reducing that period of stagnation. And that way, that'll just help with kind of everyone's emotions as well, of paying for access to the product, and that long-term vision of growing your account and whatnot. Instead of having this period of stagnation and whatnot, and having to pay the 147 throughout it, right? So reducing that period. The other thing we wanted to do was to have higher profitability in the back test. So basically increase all these numbers, the average monthly return, all that, but then also decrease the max drawdown. That was our other goal. So lower the drawdown in the back test as well. And so that's our goal with G8, has been our goal. That's what's been taking a while, and why we've been working on it for months as well. And you can bet that as soon as we release G8, we're still going to be working on the next upgrade, right? I mean, we're always going to be innovating. We're always going to be trying to make it even better, even if it's fine as is, but why not make it better, right? So that's going to be done, actually, G8 this coming week, and we're really, really excited about it. We're excited to release the backtest results. We're excited to release that period of stagnation over the 16 years. And what we're going to do is just to make sure, like I said, it's just an upgrade from G7 to G8. So we just want to make sure that there's no, bugs or anything like that. So we're going to have 2 weeks of testing, just to make sure that, everything's running smoothly and whatnot. And then that's when we'll release it to everyone. So that's kind of the time frame. There would be, maybe 3 weeks out, because it'll be done this coming week, and then probably about 2 weeks of testing. But, of course, in the next 2-3 weeks, we'll be releasing a lot more information as we get a hold of those backtest results and we begin testing and stuff like that. We'll show that. Now, I'm not sure. I'm sure you guys have the question. Was G7 still going to be available? I'm not sure, because obviously G8 is, it's like, why would you have the iPhone 7 when you could have the iPhone 8? It's like the same phone but better features, basically, right? So I'm not sure exactly if we're still going to have G7. But it would be interesting to run G7 alongside G8. So maybe we will. Maybe I'll keep my account running, my live account running on G7, without touching it, and then I'll start a new account, fresh account on G8, for example. Maybe I'll do that. But anyway, we'll keep you guys updated on that. Now, the last thing I wanted to talk about, guys, is actually something I'm really, really excited about. And it's that same thing. Imagine if you had a period of stagnation, of 144 days or even 30 days, right? Even a month. So you pay 147 and you break even, or even this last month, you have a losing month, and it's like, if you have that short-term mindset, it's going to really eat away at you. And I understand that, and hopefully you understand that, what you signed up for with G7 is to expect losing months. I mean, that's going to happen, right? But obviously, I mean, who wouldn't be happy if this had happened with their account? Am I right? So, obviously, if you think that the potential of G7 is worth it, even with these losing months, I mean, Joe talks about that a lot in his post, actually, of, this is what you signed up for, right there is 34 consecutive losing trades, 5 consecutive losing weeks, 2 consecutive losing months, right? So anyway, so that's that's to be expected, and that's what you signed up for with the 147 for G7, right? Which, like I said, is worth it, but you have to have that long-term mindset. However, I'm really excited about this, guys, because I personally have kind of, and maybe you've had the same thing, but I've had that itch for like a short term product, a product that I could withdraw from weekly or bi-weekly and just have this kind of, weekly cash flow product that I can use and maybe be a little more aggressive with and withdraw from weekly and maybe even use, if you guys manually trade, maybe even use, alongside your manual trading strategy. Like I think it'd be awesome. So that is Titan X or whatever we're going to end up calling it. We still don't know exactly what we're going to call it. But it's going to be a really cool product, guys. It's going to be a scalper. So if you guys remember Titan, actually back in the day, Titan's an amazing product, right? It just wasn't built on data that is like the market conditions with the coronavirus and everything, crazy right now. Now with the market kind of returning back to normal, maybe Titan's going to kill it again, with the normal market conditions. But that's when I would say Titan was killing it and would kill it, and kill it in its back test was during just normal market conditions. So it's hard to have Titan, the original Titan, as a long-term product. But we want to have a short-term product that's a scalper that actually cost averages, and this isn't your typical martingale as it moves more against you, get into bigger lot sizes, lot size trades on that same trade, same direction as your original trade or whatever. It's not like that. It's actually going to be really interesting. We'll cover it more. I'm not going to go into detail now, but we'll cover it more in an upcoming video that explains Titan X or whatever we call it. But it's a really cool strategy, guys. I'm really excited to show you how the cost averaging works with it. And I think that, me personally, that makes it really exciting for me because, cost averaging works really well, especially, in the short term, if you're just trying to get profits in a week or in 2 weeks or whatnot, especially a scalper that's cost averaging, on a lower time frame. I mean, that can cost average pretty quickly and, close trades, and then you can be in and out, right? So it's definitely I would say like a more exciting product than G7, G8 is going to be, because that's the long-term product and this is the short-term. I think short-term satisfaction is always going to be more exciting for people, right? So I'm personally excited about this. Like I said, I've had that itch for the short-term satisfaction. But guys, we actually are going to make this, or our goal actually is to make this Titan X back testable over 16 years. So can you imagine that? It's a scalper, it cost averages, and it's back testable over 16 years. Which might seem crazy, right? But that's our goal. That's our goal, and I'm pretty sure it's gonna work. It's gonna happen. It's in the works right now. I don't want to give too much information on it now. It's been in the works now for quite some time now, but we'll release a video on exactly how it works, the cost averaging works, and the back testing over the 16 years and everything. But I'm really excited about it because, basically it's gonna, in my eyes, we don't want just a short-term product that, 1 week could do really well, the next week could blow your account, right? We want a short-term product that is also a sustainable short-term product. So something that you could be a little more aggressive with, but, it's also going to have good money management, like you've seen across, all of our, even Titan, the original Titan with G7, always has really good money management. But then is also, back testable and is scalping and getting those profits weekly. So anyway, that's our goal with that. I'm really excited about it to, post this video and show, hey guys, here's my G8, G7 that I, have just left running. Here's how that's going. It's looking great. And then here's my short-term, Titan X or whatever we call it that, I made $200 this week, and I'm withdrawing that. And actually probably what I'll do, guys, is withdraw and just deposit it right into my G7, G8. I think it'll be a really cool strategy to actually use another product we have to grow money in the short term and then, put it into the long-term product. So that's kind of my goal with that. So this product, Titan X, is going to be done around mid to late June, maybe even first week of July, around there. So it's, it's probably about a month out or something like that. And don't quote me on this. Obviously, I don't know the exact date, but that's what I'm estimating is around there, just based on how things are looking. But I'm really excited to have this. So our goal, guys, is to have basically the best trading arsenal, to have the best short-term and the best long-term product. And obviously I firmly believe we already with G7 have the best by far long-term product. And I'm sure a lot of you guys agree with that. And then with G8 even coming out as the upgrade from G7, It's just going to be an even better long-term product. So we still are going to have the best. And then for the short-term product, this Titan guys, I'm really excited about it. I think this is going to be the greatest short-term product ever. And I'm just pumped about it. So anyway, guys, hope this video helped you out to have a good mindset with G7. I know it's the first losing month. I congratulate you guys if you're staying strong mentally and you guys have studied the back test and you guys have trained yourself and seen that this is something normal, that it's nothing to be concerned about, whatnot. And I hope that you guys are excited about the future with Blue Edge Financial, the future as edge traders with us, and using the short-term product, the long-term product, having this awesome arsenal, and then obviously the education to continue to learn and be familiar with Forex and strategies and everything in the market. So hopefully this helped you guys out, and let me know if you have any questions, and I'll see you guys next week at the end of week 11. Thanks a lot, guys.